Well, good evening, everyone. I hope everybody had a great weekend. Starting to get into the Christmas spirit, and yeah, I'm looking forward to getting the family all together here this Christmas. Hope everybody else. Hey, Joe, how's it going? All right, it's 8 o'clock. Let's not dilly dally around here. Let's get started. Let me get rid of the timekeeper here. Kill that puppy. And yep, correction. Yep, if you blink, you missed it. Well, that could have been our correction last week. Let's go. Disclaimer: trading involves the risk of loss of capital, and you should examine your own circumstances to determine the suitability of exercising any trading strategy before doing so. I strongly suggest you use simulated trading and get good at that first. And these examples and what we talk about, trade ideas, they're for educational purposes. They're basically showing you what I'm looking at and what others maybe in the room will, but it's anything presented here by anyone is for you to evaluate and you to decide only. We're all big boys and girls, and we know that we're in charge of making our own decisions, good or bad. And anybody new here tonight? Hey, Yarmila, Richard. I'm an ex-fighter pilot with master's degrees in both business and computers. Active trader since '98, full-time trader since '09. I'm a technical trader, but I do use limited fundamentals, and we'll talk about that a little bit. I do moderate for hit and run candlesticks from time to time, and I do provide one-on-one mentoring. If you want to get some coaching, just go ahead and contact me, and we'll touch base with one another, and we'll see if what we could do to help you along. All right. Two parts of the hit and run family. There's hit and run candlesticks, primarily looking at daily swings, 3 to 5 days, that kind of stuff. Right way options, talking primarily about options. They could be position trades, they could be, short term swing trades. And the live trade alerts is a scanning tool, probably one of the best ones out there that I've ever used. And stick around till the end of the presentation. I've got a special offer for those who have never signed up for a trial. It's something you guys can sink your teeth into. It's really good. We're going to go over the economic and earnings calendars, the market overview, some trade ideas on both the long and the short side. We're then going to go with some Q&A, some not stock specific. And once we do that, I'll open it up for your stocks. Please, only one per person. And I'll reserve the right to cut it off when I've reached my time of useful consciousness. Hello, Arnaldo. How's it going? Okay, economic reports. 1 second. Okay, economic reports. Nothing on Monday of import. We do have productivity and costs at 8:30 on Tuesday. Wednesday we've got the CPI at 8:30, then petroleum at 10:30, and we have an FOMC that starts on Tuesday morning and finishes at 2 and 2:30 with the announcement and the Fed chair press conference. And Thursday jobless claims and PPI, and then Friday we've got a trio of retail sales, import export prices, and business inventories. Earnings calendar, again light. We're kind of between seasons here. The biggies here in yellow are the ones that have greater than 10% short interest. I try to make sure that the stocks have over 400,000 shares before they make the list. Some of them are a little bit lower than that because the list would be fairly thin. So I let some squeeze in here. Hello, Coach. How's it going? And let's see. MDB, MongoDB, TLRD, couple that show up. We've got cost on Thursday night after the bell, and that'll be an important one, but it doesn't have short interest. All right, let's go over the market overview. I'm going to start with the T2122. The T2122 was a darn good predictor that we were going to get a bounce, or at least get it. The bounce was a little stronger than I expected, but you just never know. And we're back up to the pullback zone again. Doesn't mean that we're going to pull back right away, but just a caution. We're approaching the highs again. All right, let's pull this out of the way, and let's go to middle, and let's go to, I'm going to start with crude oil. Crude oil got up to 59.5 on Friday, and then we're kind of in a pause mode. Stochastics RSI is telling us that we could pause or pull back here, and I'll believe it. Gold, we're still in our downtrend there, Coach. We did get back up to this 50-period moving average, but it also got to the top of the channel. We're still in that channel, and then we came down pretty hard on Friday. So between the middle and up. Can I widen my screen? Let me do this. How about that? I did that for everybody. All right, so you should be okay now, Ann. All right, so we're coming back down into the middle with gold. S&P off a little bit here in trading on Sunday night. As we're approaching this, the all-time highs at 31.58, I would think people get a little bit nervous. And you did notice that the Stochastics RSI, sorry, not Stochastics, the T2122 was telling us we could get a pause or a pullback. We may pause here just under the highs. That actually would be more bullish than actually going up to the highs, and then give us a little strength to actually punch our way through. But we never get exactly what we want, so we'll have to take what it gives us. If the markets give us lemons, we make lemonade. The Dow wasn't quite as strong as the S&P, but looks very, very similar. Stochastics RSI on both of them are kind of medium-ish, so we still have some momentum out there. NASDAQ, probably about the same as the Dow. Actually, the Stochastics RSI is a little bit lower, so we have more momentum to potentially go higher. Most of the time, it does not stop at the 50% level. In fact, you don't see on the way up. Now, on the way down, there are plenty of times where it stops at the mid-levels, but on the way up, not normally. At least it hasn't been lately. Let's go on over to our bastard, what's it, the redheaded stepchild, Russell, but we powered right up on Friday and hit new highs. And that was kind of the silent rally on Friday. So let's see if we can break out to new highs again and continue this rally in the small caps. All right, let's go back to look at the week ahead. All right, we've got some trade ideas here. I have posted them out there. Let's go take a look. We've got about 10 on each side, and we've got some examples about what we chose and didn't choose, and whether they did all right or not. Let's get back here, that, and that. All right, these are in alphabetical order. Continental Resources, CLR. CLR, I think, is really going to go up to this $40-ish level, but it may not be a straight line. I'm looking for the break above 33. We've tapped it a couple of times already now, and then we'll possibly pause or pull back again when we hit this 35-ish level. And once we get over 35, I think it's Katie bar the door for $5. So I'm going to put this on my watch list. It's not, the watch list is not a buy list, but it's a monitor list. The way I use it is I'll put an alert at the levels I want to be alerted at, and then look for a buy signal, and then go from there, but evaluate it. So a lot of the stocks you see here are going to be stocks that may not be ready right now, but they could be ready in a couple of days. CVET was on our list last week. It still stays there as long as it stays in this area here, over 15 and a quarter. It has high short interest. I think we could get a really quick pop up to the $22.50 level. Raj, if you're on YouTube recording, a lot of it depends on how busy, how long this is, how long it takes me to render, and how busy the YouTube page is for the upload. But it'll probably be closer to an hour or so after we finish talking. Can I paste the watch list here? No. What I'm going to do is what I'm going to do here is I'm going to copy it. That's the watch list. All right. Let's get back over here. All right. You're welcome. CVET, yeah, 14%. Usually what happens is when these guys get into a void right here, especially after we had a change in character here. Let's look at a 3-day chart. You can see how it basically moved up and then went sideways, and now it's gathering steam to go higher. Let's go look at a weekly, and a weekly it just basically went sideways from a weekly basis. So I think I like the pattern here because it's gone sideways and consolidated for a couple of 3 weeks, and we break out above 15 and a quarter, we could get a run. Now there's 2 ways to play it. One way to play it is to play the breakout, and one is to wait for any pullback or pause in the breakout. And since we have about $7 in it, that's the way I'm going to look at it. So what I'm going to make it do, let's go ahead and get a crayon here. So what I'm going to do is I'm going to let it break out, let it go to where it wants to go. It'll either pause or pull back, and then when it goes higher, right at the curl up, I'll get a buy signal, and what I'll do is I'll go long with a stop really tight. That's what I'm going to do, and that's how I'm going to play it. Primarily because we've got so much distance between the breakout area and the ultimate target here around 22.5. So if it were tighter there, I might be more inclined to kind of jump the gun early or whatever. And we are approaching, as we say here, we're approaching all-time highs in both the in all of the four horsemen major indices. And I want to point out that the balance of power here is kind of negative. I don't know exactly what's going on. It's not going to keep me from going long, but it'll get the hairs on the back of my head standing up to be very, very cautious about what's going on. Okay. Next one here is CVS. Another consolidation here. We did have a false breakout and then breakdown as the markets pulled back. So CVS really for the last 2 months now, anytime it pulled back was the time to get on board. this might be our time right now to get on board somewhere. Some people will probably try to wait for confirmation of 76.66. I'm probably not so inclined. Now, one of the things is that we are in overbought territory for the markets. I'm not sure how much cash is on the sidelines. And of course, we have the FOMC coming this week. So I'm not sure how much we want to trade ahead of it and get extra long while you're up near a potential resistance level and with a known event coming up. So just you figure out how much you want to have at risk with those things going on. Domo. A lot of people are going to tell me, hey, Domo's gone too far. It gapped up from 20 to 23 to 24. I'm going to have to let it pull her back or consolidate. Well, you can. But because it has 16% of the float short, I think it's going to run to 25 and a quarter before we run into any really major resistance. And let me bring up Domo on here. And what I want to see here, let me back up to a 9 month. No. Well, there's 6 months. Why is this not zooming in? Okay, there it is. Okay. This right in here has some volume associated with. These are the volume at price levels. They're like, I call them skyscrapers sitting on their side. So the skyscraper, the longest one is right down here at around the $16 level. Then we have a little bit of congestion here because of this stuff. What is that, in July, August? And then we've got a little bit more up in here. And I think we're probably going to be able to break through this area of 25 and probably go up to the 27, 28 level, somewhere around the 200. But those would be targets, and we pulled back stochastics about the 50% level. What I'm going to be looking for, let's get back to TC2000. What I'm going to be looking for is a 45-degree runner. 45-degree runners that I look for are stocks that have a wide range bar or gap up, and basically that's let's show you what this is right here. This candle right there is basically that candle. The fact that it gapped all the way up to here, I'm filling it in my brain. So this is a huge wide range bar. Could it go sideways for a few days, consolidate? Yep. Especially based on the fact of where we are. Let's show you where we are. We're kind of at the bottom of this and going up to kind of right in here. So it could be anywhere up to 25 and a quarter, but it's not a big surprise to me that we gapped so high up. We gap up 18.5% and pretty much paused and did a high wave doji. Oh yeah. Yeah, the news I think is earnings. I'm gonna say that because 311, it's about 3 months out. Let's get Domo, and there's your earnings. It wasn't nearly as bad as they thought it was going to be, and it's a big surprise. And so that's what I usually try to do. Is I will play news earning event. Watch the gap up, and at either the end of the day or at the beginning of the next day when it proves it's going to go higher, boom. Go long. Maybe if it's only a few hundred shares. And I'm going to probably, because it gapped up like this, I'm going to probably drill down to an hourly chart. And my stop is going to be probably where these ATR volatility dots are, or maybe even sooner. Greg, Buzz is based on volume at the current time. So if we were at 10 o'clock in the morning and you had, let's see, what does Stomo do? It does 500,000. What if it only had two? What if it had 260,000 shares? Is that a high number, a low number, average number? Buzz will tell me whether it's doing better than the straight line average for the day at that period of time. And that's what helps me out to find out whether we're going to be now. These are at the end of the day, so that EPZM here was 275% of normal. So it was 175% more than normal. Okay, so it was 275%, or maybe that's 275% more than normal. Sorry. Zero would be flat, same as normal. So these tell me whether we go up on less volume or more volume. And some people are like to look at the volume. And I will look at it, not as much as I used to, because stocks could continue to go up on basically no volume whatsoever. Not forever, but they could go higher than I ever thought possible on lower volume. Anyway, this guy right here, I think they want to go back at least to this 24 and a quarter area. When stocks gap up and they pull back like this, I like to watch them intraday. I don't do it on Friday. If this had been Thursday or Wednesday, another day of the week, I would have probably gone long where this red line is. But they like to retest and go up there because somebody was willing to pay 24 something. 24 and change for this one. Well, they're probably going to go back up there, and then it's going to run into sellers again. All right. Now, the fact that it has high float percentage short, that's fueled for the fire. All right. Especially 637% of normal. All right, let's move on to DRI. Excuse me, tickle. We're bumping up against this 119.75. Now remember, this one has earnings on the 19th. Well, that's only about 11 days away. But we've had some of the restaurants have reported fairly well. So maybe people are anticipating that. Maybe that's why we've got this big run. But the potential is for us to have a little bit of a gap there. Ann, when we get to the questions and answer period, the non-stock specific, could you ask that one again, please? I'll be happy to go over it. Okay, EPZM, another one where we had this wide range bar, and it was on news of, it was upgrades after it had news about some drugs. They presented on Saturday. This is where I'm using a little bit of the fundamentals because I wanted to find out, why did it run there? Is it one of these things that's going to have legs? If it was just an upgrade from somebody, it probably has minutes or hours worth of legs to move, maybe a day, and that's it. And then it comes back to Earth. With this one, the upgrade was there. But it was an upgrade because they probably had foreknowledge that they were going to have good results released on Saturday for their drug trial. DRI earnings I show as next week, not this week. It would have been on my list. Let's go to DRI. 19th. Okay, so they were correct on the 19th. Whether before or after the hours, I don't know. I don't know yet. Okay, so here we go. Where's this going to go run to? I'm going to go look at the weekly chart. Those are my notes. We basically bumped up to this $20, 19 what? 19 and change. Get out of the way. Yeah, $19 level. We could probably run into some sellers at 19, but with this strong a move, it's very possible we could get to 21 and a quarter. somewhere in between those. Ultimately, if it stays like this and it turned around, and it takes a lot to turn around to 50, this is 50 week average and 200 week average. If I look at the dailies, you can see how we've really smoked it up quite nicely here for the last 3 or 4 weeks. Well, this might have to take a rest, but ultimately it's going to go higher, especially with the 10% float short. All right. So, balance of power is changing here. We go to a 3-day, it doesn't look so great, but it looks like it's changing. We go to the weekly, they show negative, but the weekly, I don't trade the weeklies except for position trades and long-term trades. If I'm swing trading, I'm not looking at anything more than a 3-day, and that's as much to get a look at the pattern in case I can't recognize the pattern, take away the noise. But the 1-day I can tell that this puppy has changed. We're in a solid uptrend. All right. Lazard, bump it up to 39.25. We were up here before on very, very high volume back in July. Probably the last time they reported. And 7, 8, 9, 10 would have been somewhere around in here. It reported. And we don't report again until February. Lazard looks like it's had a change in character. Let's look at the EMAs and see what's happened. We're on a daily, and you see how September, October, we're kind of in this wave here, but then October to November, we went up and then we pulled back fairly deeply, but that was when the markets pulled back these 2 times. And every time we've come back in the last couple of months and dipped down below the 17, we've had a bit of a rally. Now, we're kind of between areas, 39.25 and above that. Looks pretty good. Let's see what the 5-day chart, the weekly. Yeah, we're a little bit of resistance here at 42 or so, $4 or $5 higher. That could work. Lionsgate, 11% of the float short. We were in a downtrend for a while, for quite a while actually, a number of months, and then suddenly we had probably earnings report here because the next one's not till February. We had a change, an abrupt change in the balance of power, and we went sideways, and now people are accumulating this stock. But when we break above 10 or so, I think we go to about 12, 11.75 to 12. So CP, the best ones to look at are FinViz or shortsqueeze.com. Okay. OHI, Omega Health, bumped up a bit above the 42.50, 42.60 level on Friday and immediately pulled back. It's got a shooting star. Good balance of power. Stochastics RSI is eh. The thing that I would be concerned about is if we open lower and continue to go lower. You're welcome, CB. If we continue to go lower, it's not ready. These times these stocks sometimes take 2 or 3 tries at moving through a price level. Now, some people will attribute the pullback to the fact that it hit the 50-day simple moving average these 2 times. Well, I tell you, I don't believe it. I believe it's price related, because what do we got here? It just happens to be where the 50 is, but it's these guys over here. These guys that were in and it suddenly got caught with a downdraft. They're saying, oh, get me out of here flat. Get me out of here flat. So every time we come up here, you got built-in sellers. Eventually, the reason things go up there and chunk, and they're chipping away at the bottom of this, just consider that the top of a frozen pond. And you're coming up from the bottom, you're chipping away, and eventually you get through it, and then you have a pretty strong move. So that's why I'm looking at OHI. Eventually it's going to make it there. Oil U, ProShares Oil Ultra, 1980, I guess we could go to 23.75 or even 25 bucks. All bets are off as far as oil. It's a bit of a crapshoot, to be honest with you. Now let's look at a 3-day chart here. You can't see a whole lot there. And then we got the 5-day chart. We're basically in some sort of large consolidation in that. Well, remember what we saw at crude oil, the futures, and we're kind of grinding higher. Well, crude oil is grinding higher, but oil U's not. Primarily because that's a leveraged ETF, and every day they have to balance their books. Okay, so they end up over time, if a stock that's the underlying of an ETF is flat or a slight incline, you'll see what happens with oil U. It won't really go much of anywhere. It did have a slight incline itself here, and we look at the EMAs, you can see how it pretty much matched it, but it's a little bit less of an incline than the true crude oil because it's leveraged. Last one I have on the longs here is Save Spirit Airlines. This $40 what I'm looking at. Get above 40 with 9% of the float short. 46 is probably in the cards. It didn't report again until February. So it reported back here probably with this high volume area spike. Gapped up, pulled right back in. So will this take 2 or 3 more times to get up through that? I don't know. Maybe more. But at some point it's going to break through that ice and has a $6 run in it. I want to be aware of it. Now, somebody pointed out all to me tonight. I say, well, it's not so bad. It is below the volatility dots, but I don't consider that to be a showstopper for me. What is? Oh, there's one I wanted to show. COM didn't make my list because it pulled back too deep, too far. If I do the quads here, which is basically Fibonacci's, it went below 50% to about 60% or so. That means to me it doesn't have enough momentum to hold up. It held, well, it didn't quite hold the 13.25 level, which it should have done at a minimum. So it probably doesn't have enough energy to break out to the high side. So if I don't see the possibility it's going to break to the high side, I'm probably going to go somewhere else if I have an opportunity. The other thing that was working was HAL. HAL did the breakout. It's no longer on my list because I missed it on Friday, primarily because I don't trade on and initiate new longs on Friday. It'll probably hit the 22.50. I think we'll pause a little bit and we'll grind ourselves to 24. No, I'm just pointing these out as things that I look for, and the fact that we were watching HAL for 2 weeks and it finally broke out and did a nice move on Friday. PBYI had a nice move after last week's recommendation, did a 1.5-day wonder, and then crapped out. This is why we have stops. Once it did this black, what, Thursday or Monday? Black Tuesday. Once it did that on Tuesday, if you were long, you should have been out. You don't, this is where you turn a winner into a big time loser. Because this one was up, well, maybe 10% or so. If you look at it on a 30-minute chart, it moved up, pulled back, moved up, and it changed character right here around the 3rd, which was the Tuesday. And nope, volatility dots are calculated in real time, in whatever time frame you're at. So in the daily, it will be. I've actually seen this go from green and red dots, not on PBYI, but on. What was that? Yeah. Well, probably intraday, right in here. COM went from green to red, and it possibly went back and forth between green and red. XLV. I want to point out the fact is XLV's been on a tear for about 3 months. It's probably due for a little bit of rest, but I use the top 12 to 14 ETFs to point me as to where the markets are strong. There's rotation going on. Well, there did. This told me early on to look at things like Cigna, look at things like United Health, because they were in this sector. If you have TC2000, you go up here to the component watch list, bring that up. Then I go over here and I sort by capitalization of the big dogs first. And I start to see, okay, J&J was kind of late to the party, but it came. There's United Health. It stair-stepped up. Merck, late to the party. Those are more drug-related than they are healthcare. The healthcare plans changed because there was change in sentiment, reading the tea leaves for the Democratic Party. Their presidential candidates are softening their stance on single-payer system. PFE not doing so great. Abbott, MD, Amgen, okay. But you can see right here, there are a number of candidates out of here. We've only got, what, eight into here of 62. And we've seen a couple of them that would have been nice entries on the way back. All right, so let's go on over to shorts. I'll see if I can talk a little faster and wet my whistle. All right, alphabetical order. Aramark. I said, wait, Steve, this has gone up for 3 days. Why is this on your short list? Well, let me change the color here. Going to need reds now. Zigzag, zigzag, zigzag. That pattern is established. We're in a downward move. I expect that to continue. And what I also expect to see, potentially, is that this strong move here, that's a bear flag. Potentially. That means it does need to stop. It needs to stop somewhere in this box right in here. If it breaks above the 50 period moving average, really, it breaks above this 43.50 level, it's no longer a short. Excuse me, it will have proven that it's actually rallying. Again, it's a restaurant related. But the first 3 days of last week, well, not three, there's Big Bad Tuesday, Wednesday, Thursday, Friday. Until Friday, it looked like a darn good short, but then it gapped up and ran with the markets. Now, is it just following the market's footsteps, or is it actually changing character? We won't necessarily know till this week. The MAs are telling me that we're at an inflection point, maybe changing. From an uptrend back over here, we went sideways, and now we're going to see if it can get back and to going the up way. There's a 3-day chart. There's the weekly, but I'm not trading this on a weekly. I'm trying to trade this on a short-term basis. I'm looking for a failure here and potentially a move lower. If it moves below Friday's low, you're definitely talking about a retest here of the lows and probably further. Now, the one thing you're going to have to decide, do you have enough money in it? Because it may have a great pattern, but if it doesn't move enough, that if you have to wait to let it get below 42.5, and your first target's 42, that's 50 cents. Where's your stop? If your stop's above Friday's high, that's 75 cents or so. It's probably not going to work. If you go over to an hourly chart, the stop's going to probably be up to 43 something, but you might be able to get in a little earlier, 42.75 or so. I'm I contend that I can swing trade the 60-minute chart just like it was a daily. All right, let's go to CCEP. CCEP was pointed out as a potential short after the bounce, and we were looking at it back over here. Was that Monday? Yeah, that's Monday. So we were looking at it on Sunday here after the Friday. Thought it would bust through 50, but it did not. And I bring this out as not as necessarily a trade, although it doesn't look bad. But notice that it held at a round number, $50. So this held at a $50 level. Where could it possibly go from here? There's all kinds of places it could go to here, but 48 and a quarter looks like at least the first stop, maybe as low as 46.50. And this has been in a solid downtrend. We had a couple of reversion to the mean bounces. All right. Cincinnati Financial. Again, solid downtrend. Occasionally you get a bounce like we did here. This is where I was talking about Aramark. This is the same pattern here where it went down, bear flag, and looking for a move to the low, and then it bounced, then it gave it up. And where did it go to? I was looking for maybe this area right in there, and it bounced, and then this area right in here, and it looks like it bounced. Now, is this all she wrote for this move? It's possible. You know, it's getting a little bit tired, but what's we got right here? We got another bear flag. So if we can mosey on down and then break through the 103.67, we've got the chance to go even lower. What targets would we have? The 200 period moving average, or 102, something like that. Because we're so close to the 200, I think it's going to act as a magnet. A lot of people are probably not going to get into this one until it proves that it wants to go up or that it stops going lower. Some people got their eyes on buying around 102.50 to 103. Okay, and you can see how we're in the downtrend. We got that one rise. What are we going to have to do for this one to change? It's to not be looking at a short. Well, I'm going to need for this to come down and break to a new high and then come down and make a new low. So what I'm going to be looking for, higher highs, higher lows, another higher high. So low, that one's higher than that one. That high was higher than that one. So higher highs, higher lows, uptrend. Lower highs, lower lows equals a downtrend. Okay. Pretty darn simple. All right, let's look at DG. The diddly dog here. She went down to the 100 and bounced. This is also kind of a flat bull flag. It's not great because it's kind of like this, but the possibility exists for it to go and fill the gap down in here. That's the big reason why this is on, because we have a void almost down to the 200. If this gets going to the downside, Katie, bar the door, because that has a huge number of points in it. Okay. KLAC, gap down. We're kind of moseying around. We did a kind of a rally here. Is this going to be a dead cat bounce, or is it going to be something that stops the downward move? Because what we had here, down, bear flag, down. Is this another bear flag? Well, we'll know if and when it gets over about this 165 to 167. If it gets over there, we're basically doing a W pattern. You see the W? All right. But we won't know. The candles will tell us what's happening and what's likely to follow. Meritage Homes was on our list last week. It actually worked for a bit. It got close to 63.77, and then did a bounce. It looks like it's going back down. I'm looking for at least a retest of 65 and probably the retest of this first level of defense at 63.75. I use nice round numbers. And let's do this. Those are my numbers and targets. We had huge negative balance of power when we were up in here. It's waned a bit, so we're probably picking up a few more early buyers. The people who bought over here for this run are nibbling, but they're only just nibbling. Next one we got on the short list is Maxim. This cannot go any higher than these bars right here. Mark it up. Top of those bars, if it gets above that, maybe even somewhere in there, it hit the bottom of it. And this is basically 57.45 is where it closed and closed about. Well, it got as high as what? 57.83. So it bumped up against the bottom there. Stochastic chart says it probably wants to go dip back up into there, but we could flip it back over in a heartbeat by just going lower. So we'll have to see what happens. We're at an inflection point with the, as Yogi Berra used to say, we're at the fork in the road. Let's take it. NTRA, are you detecting a pattern here? Bear flag, shooting star. We open up lower. First target's right here at the lows. Second target probably down in here somewhere, or maybe as low as 30. Last one on the list is WPC. We talked about this on our short list last week. It did a little bit of a rally, then it fell out. Was this Monday? That was Friday. On Friday. So we were looking at for a failure here and a target down in the green line. And where did it go to? I'm going to break my arm, pat myself on the back, but it's not me. It's following a system of support and resistance. There's a support level. Those were resistance levels. It broke through the resistance level. Where's it going to drop to? It's going to drop to the next support level and probably pick up some buyers. And it's basically got what? Johnny one note here. There we go. But if it works, if it ain't broke, don't fix it. All right, let's go look at a couple that we were looking at. AutoNation, Aaron's, I keep seeing AutoNation with that. Aaron's, it's bouncing along there. It's going to break out of this consolidation area to the upside or downside. I don't know which. Right now, it probably tells me it's probably going to go to the upside, but remember, it's got to make higher highs and higher lows for me to go long. So it's going to stay on the short side until we actually do that. Court, this is down and maybe more kind of like a pennant, if I want to draw it that way. But it's basically we're in consolidation. Kaboom. And we're going sideways. It's pretty flat. Foot Locker busted lower. We talked about it last week. Boom. Where did it go to? It went as low as this. I've remarked it. I was looking for the possibility of 37.5 to maybe under $35. It still could do that. With the market rally here, was it the market dragging Foot Locker higher? Possibly. There's the 3-day chart. There's a 5-day chart. And it's kind of going sideways. So the momentum to the downside is definitely waning. If I go back here and look at the EMAs, it looks like it's starting to curl up, but not going to see that with just 3 to 5 days. But I'm seeing a congestion pattern somewhere like that. Above that, it's going to no longer be a downtrend. Below that, it's going to resume the downtrend. Home Depot. There's Monday's candle. We were looking for a break below 220. It did that. It retested, and then it jumped the creek on Tuesday and went down on Thursday. Hit close to our cover zone near the 200. The 200 was just a potential target because of what? Because of the gap over here to the left and the ties over here to the left. It corresponded to where the 200 might be. Some people are nibbling early. This may just be a dead cat bounce. Balance of power tells us it's likely to be a dead cat bounce and potentially fail through that 200 to go to around $200, 210. And then TDC. Teradata looks like it's trying to bottom, and we've changed from balance of power being negative to really bullish. And I believe Teradata reported on this down move day here. I'm not sure. I thought I remember seeing news Thursday or Friday on Teradata, but I might be wrong. Okay, let's go back to our slides. All right. Said we'd have a offer for people who have never had a trial before, never been a member here. There's $60 for 2 months in either hit and run candlesticks or right way options. And you can try 2 months in one and then go to the other for 2 months. That's cool. Oh, sorry, $49. I misspoke. So try it. 2 month offer. It's $50 basically, and you're probably talking a dinner for one at Applebee's with a decent tip and a couple of beers. So what are you waiting for? Those who've tried it, didn't I? Well, we'll get that in a minute there, Bob. Don't jump the gun here. All right. You want to follow me? StockTwits. I post a few things during the week and on the weekends. YouTube normally only post stuff for the that I see. I tend not to get on the YouTube anymore and post post trades and stuff like that. But I definitely have the look at the week aheads out there. Plus, I've got a lot of stuff in the archives, so you may want to take a peek, especially trading earnings and gaps. All right, I'm going to now open up for general questions. Nothing about specific stocks, except maybe to show as an example. I think, Ann, you had a question about not understanding the float short. Let's go over to the longs. And let's see here. All right. CVET's a good one here. Okay, Ann K, are you still here? I think I see you there, but hopefully you're still with us. This has almost 15% of the outstanding shares, what they call the float, the shares that are actually being traded out there that are not held in the treasury or controlled in some way that can't be traded. Almost 15% of those are sold short. That means that people sell them when they don't own them. What that does is that if you start to get a rally above, let's say 15 and a quarter, if I was short this one, somewhere between 15 and a quarter and $16, I am going to be really nervous that this is going to run away and be against me. Now, you've got to have nerves of steel to let this get above 15 and a quarter and rise above you. And still hold the short. Why? There are a lot of people just like us that are looking at 15 and a quarter to go long. There are some other people that they went long over here and they're not going to sell it. we're going to be looking to buy. And oh, by the way, these people that are short are going to get squeezed so much that, boom, they're going to have to be a buyer as well. So you've got people that are holding it and not going to sell. You've got people that have shorted, have got to cover if it goes against them. And you got people that are new longs looking at it. Chris, I don't pay attention to that. I pay attention to the news event happening and then look at what the stock or the markets, how would they react. That's the only. Our dear friend, dearly departed friend, Goofy Golfer, he used to say, it's not about the news, it's all about the reaction to the news. And he's absolutely correct. Watch the chart. People have their opinions, and whatever opinions are like assholes. Everybody's got one and they all stink. Okay. Yeah, he passed away a couple of years, 3 years ago. And I kind of got depressed for a couple of months and didn't even show up in the trading room. Anyway, good buddy and golfing buddy of mine. Yeah. So here we go. And if this one gets up in here, what I'm going to probably expect to see, let me change this color here. Color, green. It gets up in here, we're going to probably see a rally, and it may go sideways for a little bit, and then it's going to rally again. Can you imagine being short and your boss, you're short 100,000 or 500,000 shares? It's not mom and pop. We're talking about heavy money, maybe millions of dollars out there, and they're standing to lose a bunch of money. And if they're short, their boss is going to come in. He's got this algorithm, and it'll a bell will go off in his computer saying, "Hey, this guy's starting to lose a lot of money," and he's going to come over and say, "What's your plan there, Fred?" Yep. Yes. That's what they call a short covering rally. And short covering rally. And just high float short. And I noticed I didn't mention it a number of days. It's in a percentage of the float. Let me bring that up. I think it's there. Yes. Somebody was asking earlier. Oh, I've got to get rid of this. All right, shortsqueeze.com. And we were looking here at CVET. I type in CVET. Get a short quote. It says 14.73. Now, this tells you days to cover. In the old days, they didn't do a percentage of the float. I don't even know they knew what the float was, but now lots of us use it. And the fact that it takes 6 days of 100% of the volume, if every one of those trades would be along, it would take 6 days to cover. That's a lot. But it doesn't really tell me as much as the percentage. There's the float out there, and in the percentage of the float, I don't need to know how many shares are short. I don't need to know how many days to cover. What I want to know is that this percentage right here, to me, is greater than 10%. And we have a movement event, usually like earnings. It works better on days like this. That was a short covering rally. That's a 45. Remember I was talking about a 45-degree runner? That was on earnings. There was your 45-degree run. And where did it go to? It went to the top 15 and a quarter. I don't know why, but I didn't see it. Tuesday the 12th of November. I don't know. Maybe I was hungover from Veterans Day, eating too much. But that was almost a given. Okay, Do we have any other questions? Okay. Open it up for individual stock symbols. Probably got about 15 or 20 minutes. Let me know. Only one, please. Let me know if you're long or short, or thinking about long or short. Mr. Bob wants to look at Try. Try me a river. Thomson Reuters. This nice move up, pull back. Let's see what the fibs did. Here's the poor man's fibs. I use the quad lines over here in TC2000. Draw it real quick. Where did it pull back to? 50% level. 50% level was somewhere in the middle here, so it pulled back. It tried to stop at the breakout level, but that was too close. I think it probably goes up to 72, maybe higher. Let's look at an hourly chart. Yeah, and let me go look at Try here. Eh, it's nothing fantastic. It looks like it might get through here. So if you're already long, stay there. Watch to see what it does when you get to about 71.75 to 71.50. That would be my first area to pull money off the table. Oh, we got another question follow up. John M says, in regards to share short, when you're looking to go long, say 10% or higher short. Yes. What would you want if you're looking too short? Do you take that into consideration? If it has 50 or 60% short already, I probably don't really want to pile on, because there aren't a whole lot more people to be sellers. But it's the pattern. It's not necessarily the percentage, but the percentage helps me find the longs, the short covering rally. Remember what I said, it works best on earnings, a movement on earnings, high short interest. It was a reversal against the most recent trend. Those things basically fuel the fire. If it's an upgrade from one of the brokers, you already know my thoughts on that. It's not that long lasting, doesn't have legs, but things that float to the bottom line. What do we talk about? The stock out there, not PBYI, EPZM, Epizyme, drug tests, FDA approval, something like that. That's going to float to the bottom line, especially with a small cap. All right, enough on that. Let me get this out of the way. All right, can't see the. We got to go way back up there. Whoa. Behinds. TWOU. TWOU is in the gap. We basically talked about it back over here when it gapped up. I don't know, there was probably some news here around the first part of November. Maybe, I'm not going to go speculate. Then it reported and it gapped way up here but couldn't hold it. Where did it pull back to? Pulled back to the 8 and then basically picked up the new move up. Problem is it's getting a little long in the tooth. So it's basically been going since the 1st of November, about 45 days. And this is showing that it pulled back with the markets or whatever. There are people that will not go long a stock when it's below the volatility stop. And that's probably not a bad idea when you're first starting and you're learning how to trade. You really have to see something special, and I don't see that in this one. If I see it below the volatility dot and I have a good buy signal, I don't have a problem. If it's below the volatility dot and I don't, which this one definitely doesn't have on a Friday. That was an up day, and we have a negative candle, a bearish engulf. No, you got to make it show some strength. Ron wants to look at Amarin. Amarin probably wants to go up here and retest this high. And right now we've just kind of got a doji, well, what I think Doug would call a fig Newton, because it's black on the inside and white on the outside here, and that kind of a cookie. But it's got to get above 2290 to 23. Then it'll be go back up. But stochastic charts eye tells me we should have gone and broken that high of 23 on Friday. And the volume kind of tailed off a little bit below average. So yes, none of those should stop you, but I would make it go over 23 and then pick up an hourly chart to figure out where you might want to put your stop. Herman, okay, ask someone else a question. Reggie wants to look at ADM, Archer Daniels Midland. Oh, nice breakout of consolidation. Ooh, let me bring this one up. Thank you. This right here, let me go to a 3-day chart. You see that? I'm going to go to a weekly. You see that? The problem we've got maybe is 45. We've got a little resistance or whatever. I'm going to go back and look. Yeah, we're probably going up to 45 if we test these highs here. We can do it to a weekly. Get over 45, it'll probably climb that wall of worry up here to maybe around 50. So ADM doesn't look so bad. Thank you. Crowd. We would looked at that, I think, in the rooms. Yeah, it looked pretty good here, but if you're looking to go crowd long, Jay, is there anything bullish about this pattern at all? The last 3 days down, making lower lows. My stochastics RSI is pointing lower, and it's already reporting earnings, and it went down after earnings. I wouldn't even go long with your money on this one. This is probably heading right back down to 45-ish. This actually would be a short potentially, especially on a bounce. Bounce back up to 53 to 54. I'd watch for that then to fail. Facebook. David, I'm only going to take the first one there. Only get one. I'm running out of voice. Faceplant has been on a roll here. I think we're going back up to these old highs. We did it once right here around 203, 204. Looks like it wants to try to go back up, and we'll see if it breaks out. If it breaks out of these levels, 210 or more. Okay, Aaron, thank you for posting. MT wants to look at NetApp. Aaron, if you've got any that you want me to look at, or sorry, one you want me to look at, please point it out. This probably one bit too high to be a bear flag, although it could still turn into one. But it's not a long to be yet. So MT, problem is it just recovered from the downtrend. It's got high volume right here around 61.75 to 62. It's got to make higher highs, higher lows. Well, it's probably made a little bit of a higher high if it goes up another day or two and then comes back. Stochastic RSI says it might, and then makes a higher low, and then gives you a buy signal. Sure, but put it on your watch list, but don't go long now. Ron Lowe wants to look at LOUG. I don't know about that. No, probably look at long. GTN for Dolores. Gray Television Network. We had a shooting star here on Friday as it hit the prior swing high. Let's see if it can open. This is pretty simple. It opens up higher and moves through 2085. It's going higher. If it opens up and then proceeds to trade down below 2060 and goes lower, it's going lower. Now, I know I've hedged my bets there with saying it goes and whatever, but look at a 15-minute chart. If it breaks the 2050 level, you're probably going lower to 19, 20, somewhere in this area. If it breaks the 21 level, depending upon the markets, it could break out to new highs. All right, great. T wants to know, short afloat, does it include people who sell short? Yes. I mean, that's what it is. It's the short percentage of float are the number of shares that are float, that are short. So I don't understand the question. It's only the people who sold that didn't own the stock. They have a minus position in their portfolio. Don wants to look at WLL. Yeah, we looked at that a while back. But I turned it off. If you're looking at WLL long, Don, you got to make it do a higher high and higher low. You just cannot jump in on this one. Let's see if we can see blue here. You got to make it do higher highs and higher lows. Right now, it's trying to go higher, but you're going to probably have to get above 6, not maybe all the way to 7. And then it needs to pull back or go sideways and establish a higher low. And then turn up and have a bullish signal. Really, none of these in here are bullish signals, to be honest with you. This is just a reversion to the mean. And it took a while to do that. It used up all its momentum just to get up to $5.50. This is probably not one that I'd want to be going long. Not for a while. Kevin wants to look at Mass. Masco. I bet you if I looked at the weekly, yep. Move up, pull back, rejected the lower prices, 50% level on Stochastics RSI. Don't like the fact that we gapped up and pulled back on Friday, but probably make it get about 46.5 or so. It probably wants to go up and retest this area here. They got a little bit bullish. People kind of got ahead of themselves on it. We're probably wanting to go back up here to this $47 though. That's where the volume and price level is. With this right in here at the close. Did Masco, this kind of looks like Masco was added to us to one of the indices. On daily real quick. That was earnings. That right there was 917. Can't see beyond that. Well, there are enough news events here, primarily the earnings here, and we're really on a weekly that's See how we're just climbing that T line. This looks like a good possibility if it goes higher. Goes above, in the middle of Friday or above Friday's high. Probably wanting to go up and retest this area around 47 and a quarter. Sully, all right. I'm going to put this time out because we're 9:15. I'm starting to really lose my voice. Sully wants to look at Mallinckrodt, whatever it's called. Mallinckrodt. Crud. If you're long, be careful. If you're not long, well, here's a problem I've got. Let me go over here. It does trade enough volume, and it is an RBB pattern. But this is not one that I want to get involved in, primarily because it's under $5. Most stocks that are under $5 cannot be held by major institutions. They could have hedge funds, speculative funds, stuff like that. But the biggies aren't going to go below $5 or $10. Well, and oh, by the way, you don't have a company that's trading at $10, $20, $30 a share go bankrupt overnight. You could have one below $5 go bankrupt overnight. I don't want to get caught up in those. So there are, now, back in 2008, 2009, a lot of stocks got down below 2, even 1, that were good companies. But we're not there anymore. So, yeah, a lot of people want to trade the low price stocks, but with zero commissions now, heck, you could trade 10 shares of Apple. You could trade 25 shares of a $200 stock. You could trade 50 shares and even split them up because your commissions are not going to hurt you. It's just whether the stock moves. So we have to change our mindset that we always had to buy in large quantities and buy lower price stocks. We can move ourselves up quite a bit higher in the dollar value. Okay. Enough about that. BHC. BHC, any pullback, jump on it. Not sure I'd jump on it right up here though. Let it do a pullback or consolidation. Milieko wants to look at Bristol Myers. Shooting star on Friday is not good. Balance of power is negative. People have been selling into this rally. That doesn't make it bad. Doesn't mean that these people are right. But there's a lot of them for this to show up with that much red. So let it pull back. Let it establish a higher low. So it's got the higher high already. So let it pull back and curl back up and give you a buy signal somewhere in there. And then you can go long. Now, what would negate this potential shooting star? Most candlestick patterns, are made up by 3 candles. You got the first candle, you've got the second one, I'm going to make that a shooting star, and the third one, they should be in red. Up, shooting star, confirmation. Almost every one of our candlestick patterns is a 3 candle pattern. And in this one, as soon as it goes below Friday's lows and starts going lower, you don't know when it's going to stop. Can it just be a pullback and pull back maybe to this level? Could it pull back to this level? Could it pull all the way back down to the 50? I don't know. None of us know. All right. So wait until it curls, it stops going down and starts going back up, and then you could take a gander at that one. Mike Forsyth wants to look at Endo. Is this forming a trend? Well, I go back right to my 8 and 17 exponential moving average EMA only chart. Has this broken the downtrend? Yeah. It's already established the trend when it got back up here September, October. So let's go see what September, October brought us. Yeah, we got back above the 50, and we're making, let's get our green box. There was a low, there was a new high, higher low, and a little lower low to equal high, higher low, higher high, higher low. Uh-oh, watch out. It's a lower high. Oh, watch out, lower low. Equal high, higher low, higher high. And we don't know yet whether it's going to be a higher high or not. And I don't like the fact that it's $5. 39 cents a day, average to range is 8%. Not for the weak of and faint of heart. All right. Did I miss this? I think I missed one here. Reggie at Amazon. I'm sorry about that. Reggie, if we follow through above 19 this week, yeah, I like it. Where's it going? Probably headed to 2050, 2075, the top of this gap down. Amazon. Kauser wants Amazon long. I don't see anything bullish about Amazon. We're basically in a wide trading range here. Now, yes, it is $275 wide, but we're talking a $2,000 stock. Well, no, I mean, you got to break out or break down. Right now, there's nothing bullish about this candle pattern right here. Let's see if we can get rid of this puppy here. That was somewhat bullish, but it should have stopped and curled back up, but it didn't. It's basically just doing a full retracement. In fact, if we break below this level here around 1730 to 1740, this is potentially a short. Now, the problem is we've got support level right about 17. We can make money on a short trade on that. Still in the box. All right. Yeah, I'm going to have to get something for this voice. You're right, Ann. All right, folks, thank you very much. Yeah, Scott, I think I'll do that. We'll, if you guys have not tried a trial in our room, I think two things you'll notice. One, we've got a lot of good people and good traders. The one, it is probably more important, is they're good people. They love to share with people and help people out, especially people who are new, because we were all new at one time. And on top of that, there are a lot of damn good traders. We're not talking about just the moderators. We're talking about a lot of the people in the room. And they come up with trade ideas all the time. Try it. It's $49 for 2 months. $25 a month. Come on. Anyway, I'm going to close it off tonight, and We hope to see you again next week, same time, same bat channel, 8 p.m. Eastern. Aloha. Let me stop the recording.